SoFi stock closed the week above $15 a share for the first time in God knows how long, right? We've been talking about SoFi for a long time on this channel, actually since January of 2021. We've been talking about this stock, but more recently, especially this year, yes, it has been painful for a long period of time, right? I've been saying this time and time again. A good company, a bad stock. Good company, bad stock, because the stock has not done a lot for a long period of time until a month ago, right? A month ago until today, the stock is up 50%. Year to date, you can clearly see that the major 56%, the big move came from just a month or so ago, because back here in October, the start of October, the stock was still down 9.4% year to date. Now it's up 56.78%, has a market cap just short of $17 billion, which also means, by the way, that if you want to get included in the S&P 500, you have to be worth more than $18 billion. And of course, you have to stay profitable as well. So yeah, let's see what happens in the next 12 months with regards to the S&P 500 inclusion. I don't think it's going to be something for 2025, maybe something for 2026, but who knows? Year over year, the stock has done even better. It's up over 130%. Now, by the way, right now, we still have a short interest here of 16.7%. I know. Some people will also say, oh, look at valuation, 76.7 times forward PE. That doesn't make much sense. I mean, you're right on the doesn't make much sense part, but it doesn't make much sense to look at a forward PE for a company where a year ago it wasn't even with a E, right? It had no E a year ago, just a P. So yeah, in the future, you will have to look at forward PE, or you will look at forward PE, and maybe that will give you some better information. Currently, I'm sorry to say, this is as useless as they come. Now, if you look at what the analysts are expecting, because what you're getting here, the forward PE, is based on what analysts are expecting this stock to do. So growth-wise, fiscal year 2024, sales growth of 23%, followed by fiscal year 25 and 26, where sales growth will be above 17%, but EPS growing much quicker than that. EPS growing in fiscal 2025 by 97%, and then closer to 75% in fiscal 2026. But we know that management thinks that in fiscal 2026, GAAP EPS should be between 55 to 80 cents. So quite higher than what the analysts here are expecting. Currently, if we look at the average analyst price target, that hasn't moved much. It still sits at around $10 or so, which means, well, 35.4% downside from the price we're at right now. And so let's talk about SoFi, what I'm doing with my position, what has happened with the company, why I still feel that, well, we have a long way to go, but for new investors, maybe right now might feel a little bit scary since we are at $15, stock is up so much in the last couple of weeks, etc. So let's discuss all of that in this video. If you're new here, do me a favor, hit that subscribe button. You might be one of the newest member to the 60,000 subscriber channel. We're trying to reach that very soon, so hit that subscribe button. It's free. You can always unsubscribe later on. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, I do want to spend a couple of seconds here talking about our great CEO, Anthony Noto. Remember the CEO that a lot of people have been saying, oh, he needs to go because SoFi stock hasn't moved much. Well, I doubt they're saying the same thing right now. But this is one of the few CEOs of a publicly traded company that has been buying shares of his own company for a long period of time and time again. He came in and he bought more. He bought more. And look at the prices. Incredible. So congratulations to him. And yes, don't be surprised that if we continue to go up, some selling plans will get triggered along the way. So you're going to see some selling, but right now this is something beautiful to watch. Now, another thing that happened more recently is this. The Bank of New York Mellon Corporation, a global financial services company, has been selected by the US Department of the Treasury's Bureau of the Fiscal Service, that's a mouthful, as the financial agent for the Direct Express prepaid debit card program. The 5-year agreement begins on January 3rd, 2025. MasterCard will serve as the program's payment network, a role it has played since Direct Express inception in 2008. Additional providers include Galileo Financial Technologies. Now, important to note, this is additional providers include, this is not just Galileo, there are some others out there as well, but great to see Galileo here being mentioned. Now, you know me, I've been saying this for quite a while. I think Galileo and the technology platform have been a bit underwhelming, right? On the information side and on the action side as well. Hopefully in 2025, we'll see a little bit more movement with regards to those segments of the business. Now, one other part of the business where I will be focusing some of my attention on is this. Remember this one, the shift towards more fee-based, capital-light, and lower risk revenue sources. They said the following: combined fee-based revenue made up $174 million, or a quarter of our adjusted net revenue in Q3. This revenue grew by 65% year on year. On an annualized basis, that's nearly $700 million in revenue. I mean, this at scale is going to be insane. This progress was driven by a record quarter in our loan platform business, which totaled $56 million in fee-based revenue and is up more than 5x year on year, as well as strong growth in interchange, which is up 2x year over year. I mean, this might also be one of the reasons why they're so comfortable in those long-term, longer-term, let's say, or maybe mid-term projections of theirs, right? When they said that for the 2023 through 2026 time period, they saw 20 to 25% compound annual revenue growth, and they also see 20 to 25% EPS growth beyond 2026. And this is the part what I mentioned at the start of this video, the GAAP EPS for 2026 between 55 to 80 cents. Now you might say, oh, but this is a company that has overpromised and underdelivered. No, on the contrary, this is a company that has underpromised and overdelivered along the way. It just happened to be that, well, a previously big part of their business, which was the loan segment, well, couldn't really operate like a normal business, but that's about to change. I mean, last quarter, we've seen contribution profit for lending, technology platform, and financial services reaching record figures. And I think we're going to see that continue. This is also a company that has more members today than ever before, growing quite quickly, 35% year over year. Got more products today than ever before, growing 31% year over year, or 37 when you exclude the digital assets accounts. So yes, I think I'll trust management when they tell me their midterm growth guidance, right? They've been delivering time and time again. It's been beat after beat after beat after beat. So really, I don't see why I should doubt them. I will remind you that I made a video. Okay, I think we've been seeing these videos quite a lot. I said, is this the last time we're going to buy SoFi under $10? That was, I don't know, a month plus ago. Some people will say, oh, if I had $1 for every time someone told me that I can buy SoFi for the last time under $10, I'd be a millionaire. Yes, I agree. It's been quite painful. But I kept on saying the same thing. Good company, a bad stock. Why should I sell my stock? If the company continues to produce the goods, if management executes, why should I sell? Because they have not given me a reason to sell. If their projections, their guidance for 2026 suddenly changed and was lower, then okay, then maybe they're giving me a reason to doubt. But so far, nothing. I mean, you can see this right here. Previously, if we go all the way back to April 2022, it took 441 days until this thing made a move back to over $10. Then, from that move, over 460 days until we've had our move right here in the last couple of weeks. Now, yes, it's true, it is overbought, but to be honest, it's been overbought for, well, over a month now, and still the stock goes up and up and up. So, okay, but what I believe, again, this is what I believe, is that previously, before the big move here, SoFi stock was just not understood by the market. So yes, I would say that 30% of that move here is justified. It's just the market finally realizing that SoFi is not a crappy company, not a crappy name. And the rest, yes, the rest is just momentum, maybe fear of missing out and stuff like that. Could very well be. So right now, for those that are asking themselves, is it too late to buy SoFi? Should I sell? Should I take profits? Let me start with the easiest one to answer, and that's the taking profit part of it. Nobody lost money when they took profit, because guess what? You are taking profit, which means you're taking money off the board that you're investing, and the rest you keep in that position. That will keep on growing over time, of course, if it's a good company. But the most important part is this, that you have secured profits. The money is now in your wallet, because at the end of the day, why are we investing, right? Why are we investing? Just for the fun of it? Oh, so we can talk about stocks all day long? No, me personally, I invest so in the future I can retire early. I can put my kids to school, my future kids through school, and maybe help family, maybe help friends if they need to, right? That's why we're doing it. I'm not just doing it for the sake of doing it. No, I'm doing it because I want to make money at the end of the day or at the end of the decade, right? Because the more we are investing, the longer time we're in this, the better. So yeah, that's part one of the answer. Part two, if you don't have a position, dollar cost average or sell puts. If you really want to hold the stock, sell puts. Yes, options is not something I talk about, but more recently I've been looking at selling puts, especially when things go up quite a lot and I want to own more shares. Selling puts is a good strategy. So yeah, and for those that think that, oh, $17 billion is already the top, then yeah, it's quite easy, sell and move on to other things. So that's it. Me personally, not doing anything. Maybe if we go up closer to $20, maybe then I will start selling a little bit, but all in all, very happy with my cost average, very happy with what's going on with the company. Yes, on a technical, it is overbought, but to be honest, now my cash pile is already better than before. So yeah, I see no reason today to take profits, but maybe that will change in the next couple of days. Let's see. So I hope that's clear. I hope you enjoyed this video. If you have questions, let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.